What if I told you that the secret to understanding the future of the Iraqi dinar isn't found in shady online forums or get-rich-quick schemes, but in the steady, predictable flow of oil and the careful policies of a central bank? If you've been searching for a clear, honest picture of where the dinar is headed in 2025, you've come to the right place. Forget the hype and the sensational rumors for a moment, and let's anchor ourselves in reality. Overwhelming consensus from market experts and financial institutions points towards one primary theme for the Iraqi dinar in 2025: managed stability. This isn't a story of dramatic explosions in value or catastrophic crashes. It's a story of a currency being carefully steered through turbulent global waters. As of late 2024 and looking ahead, the exchange rate has been holding remarkably steady, trading within a very tight range of approximately 300 to 310 Iraqi dinar per US dollar. This isn't an accident. It's the direct result of a deliberate managed exchange rate policy implemented by the Central Bank of Iraq. Think of it as the currency being held firmly in place by the central bank's hand, which uses the nation's financial resources to smooth out any sudden jumps or dips. This stability is the central bank's primary goal, as wild currency fluctuations can be disastrous for an economy, leading to unpredictable import costs and spiraling inflation. So, when you see the rate barely moving over weeks and months, you're seeing a sign of a system functioning as intended, not one that is stagnant or failing. The key pillar propping up this entire system is, without a doubt, oil. Iraq's economy is profoundly dependent on revenue from crude oil exports, which account for over 90% of the government's income and a massive portion of its foreign currency inflows. When global oil prices are high and production is steady, money flows into Iraq's coffers, strengthening the country's foreign exchange reserves, which are estimated to be in the range of 100 billion. These reserves act as a massive war chest for the central bank, allowing it to defend the dinar's value by intervening in the market if necessary. This robust financial cushion is a primary reason why analysts from institutions like the International Monetary Fund project the dinar remain within a narrow band throughout 2025. This outlook represents the base case scenario, which carries a high probability according to financial experts. It's a scenario of continuity where existing policies and economic conditions persist. However, stability does not mean there are no underlying pressures or stories to tell. Beneath this calm surface, there are other dynamics at play, including a notable gap between the official exchange rate and the rate you might find on the parallel or black market. Gap exists due to a combination of factors, including increased scrutiny on Iraqi banking transactions to curb money laundering and restrictions placed on some Iraqi banks from dealing in US dollars. This has sometimes made it more challenging to access dollars through official channels, pushing some demand toward the unofficial market. Furthermore, political instability and the slow pace of economic reforms continue to be lingering risks that could, at any moment, shake the confidence in the currency. So, while the official story for 2025 is one of remarkable steadiness, it's a stability that is actively maintained and vigilantly guarded against both internal and external shocks. The central bank's ability to continue this defense is the single most important factor for the dinar's short-term future. And it's a story not of explosive growth, but of careful, deliberate control in a country working to build a more stable economic foundation despite the many challenges it faces on a daily basis, from political negotiations to the constant fluctuations of the global energy market, which ultimately dictates the financial health of the nation and the purchasing power of its currency in the international arena, a complex interplay of forces that makes the dinar a subject of intense speculation, but for the informed observer, a clear case study in modern monetary policy in a resource-rich developing nation. Now, let's pull back the curtain and look at the powerful forces that will ultimately decide the dinar's fate beyond this year of stability. Understanding these drivers is crucial because they are the levers that will either pull the currency towards gradual strength or push it towards unexpected weakness. The first and most significant driver is, as we've touched on, the health of the oil sector. Iraq is the second largest oil producer in OPEC, and its entire fiscal house is built upon this foundation. The amount of oil Iraq produces and the price at which it can sell that oil on the global market directly translate into the US dollar resources the country has available. Any disruption to production, whether from geopolitical tensions or adherence to OPEC agreements, or a sudden drop in global oil prices, would immediately put pressure on the dinar. Conversely, stable or rising production and prices provide a solid floor of support. The second driver is the Central Bank of Iraq itself. Its policies are the steering wheel for the dinar. The bank has repeatedly demonstrated its commitment to the managed peg, using its substantial reserves to intervene and smooth out volatility. Its public messaging consistently emphasizes its capacity to defend the exchange rate, which in itself helps to maintain market calm. However, these reserves are not infinite. A prolonged period of low oil prices or capital flight could eventually strain this buffer, forcing the bank to consider more drastic measures. The third major force is the political and security landscape within Iraq. The country continues to navigate a complex web of internal political rivalries and external influences, particularly from Iran and the United States. Political infighting, protests, or a resurgence of security threats can quickly spook investors and undermine confidence in the currency. Stability that supports predictable economic policy is a boon for the dinar. Instability has historically been a fast track to currency weakness. This is intricately linked to the fourth driver, the progress of economic reforms. International institutions like the International Monetary Fund, IMF, are actively engaged with Iraq, urging for structural reforms to reduce its dependency on oil, diversify revenue sources, and curb generous public spending. Progress on these fronts, such as improving tax collection and modernizing the banking system, would be a powerful signal to the international community, potentially attracting foreign investment and strengthening the dinar's foundations. The IMF has approved a multi-billion-dollar loan to support Iraq through this process, and their continued involvement is a key factor to watch. The fifth and final driver to be acutely aware of is the market's own structure and the pervasive myths that surround the dinar. The Iraqi dinar is what is known as a thinly traded currency, meaning it is not as easily bought and sold as major currencies like the euro or British pound. This lower liquidity can lead to wider spreads, the difference between the buy and sell price, making it a more costly and risky endeavor for traders. More dangerously, this environment is a breeding ground for rampant speculation and outright scams. For years, persistent online rumors have circulated about an imminent revaluation, or RV, where the dinar would suddenly be worth hundreds or even thousands of times its current value. It is critical to understand that no credible authority, including the Central Bank of Iraq and the IMF, supports these claims. They are consistently debunked by economists and are often used by fraudsters to trick hopeful investors. The reality is that any future strengthening of the dinar is far more likely to be a slow, gradual process tied to tangible economic progress, not a magical overnight windfall. So when you hear these stories, you must ask yourself a simple question: if such a guaranteed, life-changing profit opportunity truly existed, why would it be sold through aggressive online ads and secretive groups, instead of being the primary focus of every major investment bank and hedge fund in the world? The answer is because it's a fantasy, one that preys on hope and a lack of access to clear, factual information, which is exactly what we are providing in this very video to empower you, the viewer, with the truth and to protect you from making a financial decision based on pure emotion and deception rather than on hard data, rational economic analysis that considers all the complex in a nation's journey to economic stability and growth in a highly competitive, interconnected global marketplace where every decimal point in economic story of underlying economic story or vulnerability. So with all of this in mind, what does the crystal ball show for the Iraqi dinar looking beyond 2025? And what does it mean for you, the viewer? Let's talk about the future and separate realistic expectations from pure fantasy. Looking ahead to 2026 and 2027, the forecast becomes less certain. The potential for slightly wider movement increases. Projections from economic analysts suggest the exchange rate could see more noticeable fluctuations, with some models indicating a potential range in 80 to 1, 350 IQ per USD by 2027. This doesn't point to a single dramatic event, rather to the ongoing tug of war between the forces we just discussed. The possibility of modest, single-digit percentage appreciation exists. It is heavily contingent on Iraq successfully implementing the economic reforms we mentioned and maintaining political cohesion. This would be the bull case, where prudent fiscal management and sustained international support gradually build a stronger economic foundation, allowing the central bank to permit a slightly stronger currency over a period of years, not months. However, we must also seriously consider the bear case, which many analysts view as having a higher probability in the short to medium term. The risk of depreciation is very real. A sharp downturn in global oil prices, a major internal political crisis, or a breakdown in international support could trigger capital flight, drain foreign reserves, and force the Central Bank of Iraq to officially devalue the dinar to restore economic competitiveness. This could lead to a double-digit percentage drop in its value, increasing the cost of imports and fueling inflation within Iraq. Therefore, for anyone considering any form of exposure to the dinar, it is paramount to treat it as a high-risk, speculative asset, not a safe investment. The potential for profit is matched and perhaps even outweighed by the potential for loss. This brings us to a vital public service announcement regarding investment. If you are thinking about buying Iraqi dinar, you must be aware of the significant risks and practical hurdles. First and foremost is the high risk of scams. Be extremely alert to any dealer or website promising a guaranteed revaluation or massive risk-free profits. These are almost always fraudulent schemes. Always verify that you are using a licensed and regulated currency dealer, and be deeply skeptical of stories that sound too good to be true, because they almost always are. Secondly, understand the liquidity issues. The dinar is not like other major currencies. It can be very difficult to sell your dinar back and convert it into US dollars or your home currency, especially outside of Iraq. Many major banks and currency exchanges will not deal with it, which can leave investors trapped. Furthermore, regulatory barriers are significant, with strict rules governing dollar transactions for Iraqi banks, which can complicate the process further. For those who are still interested in the potential of Iraq's economy but want a safer approach, consider alternative avenues. Instead of holding physical dinar, look into diversified emerging market funds that may have some exposure to Iraqi assets, or research sovereign bonds or equities tied to stable sectors like Iraqi oil infrastructure. These options, while not without risk, offer a more regulated and potentially less volatile path than direct currency speculation. So as we wrap up, here is your ultimate call to action. Let's make a pact to be smarter about this. The next time you see a viral post or a slick video promising that the dinar is about to make you an overnight millionaire, I want you to come back to this video. Remember the facts we discussed today: the managed stability, the dominance of oil, the political risks, and the sobering reality of the revaluation rumors. Your best tool as an investor is not blind hope, but disciplined, data-driven research. Stay informed by following reliable sources like the Central Bank of Iraq's announcements, IMF reports, and updates on global oil markets. Protect your capital, ask tough questions, and never invest money you cannot afford to lose based on a rumor. If you take only one thing from this video, let it be this: in the world of the Iraqi dinar, patience and realism are not just virtues, they are your most essential shields. Thank you for watching.